I like Impact Silver because it is the most highly leveraged stock to the silver price that you can find on any American exchange, even more than First Majestic. They're 90% tied to the price of silver.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, covering the gold and silver markets and all the exciting things that are happening as we see a lot of action, not yet in the gold and silver price, but things perhaps leading to that with repos galore, money printing, even if the Fed put a little pause on things yesterday. But before we get started, hit that subscribe button so that you can stay tuned and know what's going to happen before it happens, because I am quite fortunate in this life to know great, smart people like Rob Kientz of goldsilverpros.com, who has a great body of knowledge on the precious metals. Also studies and researches some of the mining stocks, which we're going to be getting more into here at Arcadia. So with that said, Rob, great to have you on here, my friend. And how are you doing today?
I'm doing very well. Thank you for having me.
Well, it's a pleasure. I was glad to find you on Seeking Alpha a while ago. I was honored to be on your show and really to get to know you better, because you have a lot of great information.
Yeah.
And certainly at a time which Wall Street doesn't make things so easy for the average person that says, hey, I'm going out, I'm working hard, I'm earning money, I'm saving, I want to be responsible. So with that said, Rob, maybe you could lead us into the gold and silver markets, why you focus on those a lot and what people should be aware of.
Okay, so this all started about 10 years ago when I got laid off from my job. I was working for a public accounting company, Earnst and Young, and laid off in February 2019 during the depth of the financial crisis because they had to restructure their business. I was working technology. I've been in technology for over 20 years and have several degrees in that space, including a master's in information security. So that was really my focus, was technology and business. But I got laid off and I started looking at the economy. It's like, what's going on? You know, this had been the second crash in my lifetime, including the tech crash, where I lost a lot of my 401k funds because I was invested in Janus at the time, Janus funds at the time. They were supposedly the best of the mutual funds with the best track record, which only went about 10 years. But, you know, if you look at the gold and silver markets, they have a 5,000 to 6,000 year track record, but they're not talked about a lot in the financial media. But I lost 40% of my Janus funds in the tech crash, and I started looking at alternative investments. I started a real estate business. I was a real estate investor for 18 years between 2000 and 2018, where I made most of my wealth that I've accumulated to date. I sold that off in 2018, but along the way, when I got laid off in 2019 from my full-time position, I decided to take a deeper look and not just look at it from an investing perspective, but try to educate myself on economics and politics and culture a little bit as well, and understand what I call megatrends. So that's the focus of my site, goldsilverpros.com. It's been about 10 years of research into all of the economy and all of the markets, but I feel like right now the best investment going forward from a trend perspective, from a macro perspective, is gold and silver. I wrote a book called Drop Shadow, The Truth About the Economy and How You Can Survive the Coming Economic Collapse, in 2009, and published it in 2010 myself. Couldn't find a publisher, so I started my own publishing company and published it, and then I started writing for Seeking Alpha and a bunch of other websites. And came to the conclusion last year that I'd been writing for so many different people in so many different forms, I wanted to put it all in one spot. So that's how Gold Silver Pros got started, and I'm focusing on the precious metals. I do also cover platinum and palladium. We can get into that a little bit if you want during the interview, but I focus on the precious metal now because I think they're some of the most undervalued things on the planet. I think they're going to become so much more valuable in the coming years as we look at what's going on in the bond markets and the coming economic collapse that I wrote about in 2009. I do focus on the stocks. I've done some research on certain companies. We can certainly talk about those as well.
Yeah, and Rob, it's a really interesting background, especially because Earnst and Young, one of the accounting firms, which is a bit different for me. I'm trained as an equity options trader, not reading balance sheets, not my strong suit. But I think that's one of the things that you notice. A lot of people were introduced to this following the crash of one of the bubbles. Subprime was the same for me. And yet, but coming from different perspectives, still end up at the same outcome. And yes. Again, what in particular caught your eye about gold and silver? Was it the money printing, or just seeing that the Fed was at the heart of a lot of these boom and bust cycles, or what started that in particular with the metals?
Yeah, in following the economy, what you quickly find is it is directly related to the money supply. And so I discovered Austrian economics, which helped really clarify, because I'd grown up in school and I'd taken economics classes in my bachelor's, which is, I have a bachelor's of business, and they teach you the Keynesian economics. They teach you basic supply and demand and game theory and things like that. The problem was that those don't actually work in the real world.
Right.
And what you find very quickly is, to explain what was actually going on to those crises, is you have to find classical economics, which is really what Austrian economics is. It's classical economics that survived over the centuries, that really explains market movements and really explains the boom bust cycle and explains the role of central banks and fiat currency in playing a role in that. And then I also discovered an author, G. Edward Griffin, who wrote The Creature of Jekyll Island, which is a great book, which really explains it in layman's terms, what goes on with the central banks. And so I really began to focus on that. And what you find, if the alternative to the fiat system, which tends to be so destructive, is honest money, and that's gold and silver. And that really tied into my studies on the Constitution and American history, because our founding fathers put in place gold and silver in the Constitution as sound money. And there was a law passed, one of the Gold Acts was passed early on in the 1700s, establishing bimetallic standards for money in the U.S. and how to weight and measure those. And during the time, part of what I wrote in my book was I studied gold and silver over time compared to the fiat currencies. And what you find over time is when we're on the gold standard, when we're actually not fiat money tethered to gold, but actually trading gold as money, prices go down over time, and the purchasing power of gold goes up, and we don't have as destructive boom and bust cycles. But as soon as we adopt a central bank or print fiat currency like we did during the Civil War, or adopt central banks like we did in 1913, the Federal Reserve, the boom and bust cycles get enhanced. They get much stronger. And fiat money loses value over time. It's lost 98% of its value since 1913, which is why we have 1.6 trillion of it in circulation today. And so when you study the boom and bust cycle, it invariably leads you to classical economics. It leads you to sound money. It leads you to the opposite of what we're experiencing now. And I think everybody that studies that, whether you come from a Wall Street background or an auditing background like I came from, or even if I've known people who are English majors who went to study the economy and they ended up at the same result. They end up at gold and silver, and they end up at Austrian economics and libertarianism and the Constitution, basically. And I think anybody that kind of follows that path and really studies it is going to go down, is going to end up at the same place.
Rob, if you had only been my teacher at Wharton's Business School, I can only imagine how much farther along it would be now. Because, like you point out, I try to be careful of saying, my opinion's right, this guy isn't. But I find the Austrian versus the Wall Street, it's like 2 + 2 = 4 versus 2 + 2 = 5. Maybe I'm missing it, but it seemed, I agree with what you're saying there. And perhaps for the folks that have been hearing a lot about gold and silver, and then get interested in the mining stocks where you do have the opportunity to get leverage. And first, I will issue my disclaimer on the show. We're not giving legal, licensed financial advice. Rob is sharing his research, so these are points for further due diligence. Yet with that said, if you do have a rally coming in gold and silver, like Rob and I feel, certainly an incredible opportunity. And as perhaps a rough guideline, bullion prices are going up, your miners are going to do well. If the prices of bullion are going down, miners probably going to go down even faster. So with that said, disclaimers out of the way, Rob, any particular companies that you're looking at and have anything to share and want to dig into?
Yeah, so I have been on sort of the networking circuit, the trade show circuit, the investment conference circuit for a couple of years. It started with the Vancouver Investment Resource Conference up in Vancouver, which I've been to several times, and PDAC in Toronto, which is the big mining investment conference every year. I think it's like 60,000 people go to that from around the world. And just doing research and speaking with companies. And there are several companies that I have a relationship with that I like to talk about. And I only talk about the companies that I have a relationship with, where I've been on the ground and I've looked at their actual operation, or I've at least spoken to management. And if I get a good feeling about management and I look at what they, the projects that they have going, I feel positive, then I'll dive into the balance sheet numbers and all of that stuff, their economic analysis and their technical reporting, and kind of get deeper into the weeds. One company I actually just wrote about on my site last week is Impact Silver. Impact Silver is a very small miner. I like to focus on juniors. I don't mind some of the major miners, but especially in the silver space, you're going to have a lot of junior and exploration companies. You'll have a few majors like Pan American Silver, First Majestic, and then you have a bunch of smaller companies that sort of fall in behind that. I like Impact Silver because it is the most highly leveraged stock to the silver price that you can find on any American exchange. Even more than First Majestic. They're 90% tied to the price of silver. They do have some gold and copper and zinc, but it is mostly a silver play. They're in the Royal Zacapotal, I have a hard time saying this word, Royal Zacapotal District, which is the oldest mining district, silver mining district in Mexico. There's a lot of old tailings work there, meaning there's just been a bunch of old mining work done there over the centuries. They took it over and they have hundreds and hundreds of acres of this. It's thin vein mining, which means you have to be very precise in your mining. You're not going to do bulk mining where you're doing a big open pit. You're going to follow the veins and you're going to precisely extract that silver. But they do have a lot of information about where that silver is. They've done a lot of study and analysis and drilling and geological mapping on where that is. And they're the experts at getting that thin vein silver out of the ground. And when the silver price goes up, they go up by multiple. And in the article I just wrote, I showed where the silver price went up by something like 40%, but the price of the stock doubled. And I've seen that stock go to several dollars a share when the silver price went up, into the $30 range. So if you want a high beta stock, something that's really going to give you max leverage to the price of silver, Impact Silver is really the best. First Majestic is certainly a much larger producer. Some would say a more stable company on a day-to-day basis. Doesn't quite fluctuate as much to the price of silver as Impact does, but they also have high leverage. But from a pure play silver leverage, if you just want to play that trend, Impact's one of my favorites. The company that's done the best as an exploration company that's actually about to start building their mine is Silvercrest Metals. And I'll give you the stock ticker for that one. It is SVCMF or SILV. It's now trading on the New York Stock Exchange. When I began writing about them, they were about $1.80 or so per share. Actually, maybe $1.60 per share. I sold them at a little over $2. They're now trading at over $6. Their current quote is $6.17. They mine in Mexico. I've actually gone underground in those mines and toured the mines with their management, and also with some geologists and metallurgists that went for a tour last spring. And so I've climbed up and down the ladders and seen their deposits. They have several veins. They have Las Chispas, William Tell, Babicanora. Babicanora is the really good one. I got to see drill hole results from Babicanora when I was on site with the geologist and metallurgist, because I'm not a geologist, I'm not a metallurgist. So when I look at the actual drill results and the actual rock in the ground, I want those guys to be there. And I spoke with several of them during that, and I had dinner with one of the geologists who writes for a buy-side publication, which they write for very wealthy investors. And he said it's a really good deposit. He said they're spot on about their cost to develop the mine, anywhere from $80 to $100 million. The Babicanora deposit has bonanza grade findings in silver and near bonanza grade in gold, and it keeps going and going and going. They keep drilling and finding more and drilling and finding more. They originally were wanting to develop that mine about fall of this year, but they keep finding such great drill results. They just keep drilling. And that's why
it seems like they're finding a lot, and also it's very high grade.
It's very, very high grade. It's going to be very lucrative. It's going to be low cost. They've tripled in price, and I think the sky's the limit for them. I think they could become one of the preeminent silver miners in the world by the time this is all said and done. Yep. I've seen the results. In my past background as an auditor, and one of the articles I wrote on them, I said I basically went and audited them. I looked at their information system, their global information system on the computer. I took an auditor's mindset to their books. I looked at their technical reports. I actually viewed the rock in the ground. I talked to geologists and metallurgists about it while we're there. I think they're the surest play in the silver exploration space of any silver miner in the Americas. I focus in the Americas mostly because it's the most stable mining district. And I think they're going to be big. And even though they tripled in price, I could see them going to double-digit stock price very easily. I don't think anybody's missed out, because once they go to production, they're going to be valued at the value of that silver in the ground minus costs. And that's a lot more than $6 share price that you have right now. If people want to understand how to value the miners, instead of talking about it here, I will say that I'm opening up my member area on goldsilverpros.com for free to anybody. Moving forward, I'm no longer going to have subscription service there. I'm just going to be writing for free. One of the articles in the member area that people can view now is how to value gold and silver miners, or any commodity miner. I give specific outlines for how to do it. So if anybody wants to go see that for free on my website, they can read the article I have there about how to do it, and you can very quickly value that. You'll see that if you take a company like Silvercrest, who's in exploration, not quite developed their mine, that's a sweet spot in the mining sector for buying stock, especially when they find a big deposit, because they're not valued at the silver in the ground. It's really just speculative right now, but as soon as they build their mines and start producing, those stocks tend to get revalued for what their silver is minus their mining costs, and it's going to be some multiple of their share price now. So now's a good time to get into a gold and silver mining stock that's in exploration and is about to build the mine, because once they build that mine, the price goes up, because now the big money, the institutional money, moves in. Yep. They'll buy that at what they think the silver is or the gold is in the ground, and you'll see sometimes a doubling of price or even more, depending on the project. So one key thing I tell people is, if you're going to invest in the mining space, there's basically 2 or 3 sweet spots for getting into miners. One is when they just formed as a company, and it's a really good management team, and you think they're going to find something, but they're trading for pennies on the dollar. That's highly speculative, though, and that tends to be boom or bust. The best spot to invest in a miner is when they found a big body of ore, which looks very economic, but before they built the mine. That's where you're going to get your best boom for bust, bang for your buck. And I think that you recently spoke to Brent Cook at the New Orleans Resource Investment Conference. He actually has a graph for his subscribers, which tells you the sweet spot, and that's his favorite sweet spot as well. When you have a large deposit, but before they built the mine. Silvercrest is probably the best bet in the silver space right now for that. They have a huge deposit. They haven't built the mine yet. They just secured $80 million in financing for it. I think they'll go double digits in stock price at least. They may get up to 13, 14 bucks. So I think that's a very safe bet for investors.
Yeah, and Rob, appreciate all that you said, especially that you have a members area that you're opening up on top of it, where people can learn about how a lot of these steps you go through, because maybe more so than a lot of other industries, it really does help to have a team where, you know, maybe you're good with numbers, but you don't have 50 years to become a geologist, where really building a bunch of different qualified opinions, and that comes through with the knowledge that you have. So I appreciate you sharing that. We were talking before we started the interview how making Arcadia a lot more silver focused. So any of these questions people have, and we will be linking to that, which people can find at goldsilverpros.com, because I do think you're a great resource for this.
Thank you.
Perhaps last question before we wrap up today. I know you had some thoughts on the repos, which are not, don't call it QE. We're putting more money than QE. But I'd love to hear what you're seeing there, and what, especially with the Fed supposedly going on pause with their interest rate cuts. We'll see if that happens. But what are you seeing in terms of all that?
So last year I went to visit Lynette Zhang. She has a very popular YouTube channel. She works for ITM Trading. She's their market analyst and their YouTube presence for that company. They're a precious metals broker out in Phoenix. I flew out to Phoenix last December, met with her. We had a good 1-hour conversation. It's posted on my YouTube channel. She reposted on her YouTube channel in February. She thought the interview was so good in terms of what was going on in the markets at that time. We talked about a lot of things. One of the things we talked about, and I told her was, so in December 2018, I said, we're going to have a cash shortage in 2019. And I said, at December 2018, there was 1.8 trillion in liquid cash, according to the Fed. If you go to the Fed's website, 1.8 trillion in liquid cash, but we had 3.2 trillion in US dollar denominated debt held by foreign parties and multiple trillions held domestically. So what happens in this fiat debt system, what Austrians will teach you is money's created through debt. So you issue debt, money gets created, but there's always more debt than money. And when you start going into a worldwide recession, which is important in US dollar terms because the US dollar is a reserve currency of the world. So trade goes to the US dollar. And that's starting to break down, but it's still been true basically since Bretton Woods. So a lot of debt is put in US dollar terms. Well, when we hit recession across the world, you can no longer roll over existing debt into new debt. You can no longer expand the debt system. So the debt system started to contract. Well, in order to pay off that debt, you have to pay off the debt to contract the debt, right? Just not refinancing it into new debt issuance. So in order to pay it off, you have to use US dollars. You can't use yuan, you can't use yen, you can't use euros, you can't use pesos. It has to be done in dollars. And so I told Lynette, I said, sometime during 2019, we're going to have a liquidity crisis. And she kind of looked at me and said, I don't know about that, Rob. I think we're going to hit hyperinflation first. And I said, well, yes, in the longer term, we'll hit hyperinflation at some point. But in the shorter term, we're going to have less currency than we need for the system. It seems absurd having 1.8 trillion, but you have to look at it relative to the overall amount of debt. When you have multiple trillions of debt and you have to service that debt, you have to have a lot of currency. So anyway, fast forward to about June timeframe, there was an article that came out in Zero Hedge. JP Morgan said we have a cash liquidity problem. We were down to 1.5 trillion. So if you look at that, since 1913, we've created $1.8 trillion in either electronic or physical form. In 6 months, we extinguished 1/6 of that to deal with the deflating debt bubble around the world. And very quickly, you can run into cash shortages. So it took 106 years to build up. 6 months, we got rid of a sixth of it. Okay, what happens if we get into a big debt crisis? What's going to happen to the US dollar? It's going to really shrink because you're going to have to pay it off. You're going to have defaults, but people are going to be paying it off as well. You're going to have cash crunch. And so what happened was that cash crunch that JP Morgan warned about and was on Zero Hedge led to the repo crisis. So in September of 2019, we had the repo crisis. What is the repo market? The repo market is the overnight funding market for businesses that need access to cash. They'll pledge short-term liquid collateral to get that cash. Well, JP Morgan had taken a lot of money out of, in addition to the money to pay off the debt, the reduction from 1.8 trillion to 1.5 trillion. JP Morgan was a big player in the money market area. They took money out of money markets, restructured their business, paid off some debt, and bet long on the treasuries. So that exacerbated the problem and created even less liquid cash in the system. So the Fed had to step in and start doing, non-QE, QE light, whatever you want to call it, into the repo market. Right now, between the Bank of Japan, European Central Bank, and the Fed, they're putting 100 billion a month liquidity back into the system to keep the wheels greased. So we almost had our Lehman moment there in September with the repo market crisis. So right now, I believe this is the first stage of the big bond default. It's the liquidity stage. It's something I called last December. A lot of people weren't saying this, but I think that's the true cause. If you subscribe to Incrementum's newsletter, Incrementum's website, they have the Ingold Retrust Report. They also have and it's free, by the way. They also have this really cool quarterly update, and Jim Rickards is one of the contributors to that. And he was talking about how the liquidity crisis led to the repo crisis. So don't just take my word for it. You can read James Rickard on that. But I think you want to get invested in gold and silver, but you also want to have cash, because I think we're going to have bank holidays coming up, maybe in 2020, 2021, as the debt market bubble starts to collapse. I don't think it's just the repo market. I think it's going to be the whole debt bubble is going to start to collapse. You're going to have bank holidays. You're going to have less and less cash in the system until the Fed needs to start bailing people out. So we're going to have less cash first before they bring out the helicopters. So if you're looking at what to do in the next 1 to 2 years to keep yourself solvent, you want to pull cash out of the bank, you want to keep it liquid, and you want to invest in gold and silver. And I believe that's sort of the 1-2 plan that people should have for the next couple of years. And then kind of watch the debt markets and see what happens on that side. I think we're going to have the bubble's going to burst eventually as the economy around the world continues to shrink.
Yeah, Rob, I appreciate that. That's one of the best explanations of this whole repo mess that I've heard yet. So thanks for putting that in context. And perhaps just in wrapping up, can let folks know the website, any other ways to find you again, so that you got a lot of great information that people can follow up on.
Yeah, I'm going to throw out one more name for you in the miners before we end up, if you don't mind. Sure. Pan American Silver is a major in the silver space. They're going gangbusters. They went from $12 to $20, mostly because they bought a gold producer. They used to be highly leveraged to silver. Now they're gold and silver. Gold has higher profit margins, and that's how Pan American is making money right now. So if you're looking for a solid silver play that has some insurance against low silver prices, then I would go into Pan American Silver. A lot of people will be comfortable with that because it's not a speculative stock like some of the earlier ones I mentioned. They're a producer. They have a good portfolio of gold and silver. They're very profitable, very good management. But when silver takes off, Pan American Silver is going to get that bump from silver. But in the meantime, they have that gold profit to kind of keep them solvent. And if you're looking for somebody to add to your portfolio that's a really big player in the space, Pan American's a really good one. It's PAAS, the symbol. And if you want to find me, you can find me on goldsilverpros.com. You can also find me on seekingalpha.com. I have a YouTube channel, although I don't market with YouTube. All my videos are there as well. You can email me at robert@goldsilverpros.com. I do respond to all your emails, and I do love subscribers who do email me. I do answer all of those. And if you're wondering what to do in the next year to 2 years and you want some personal advice, I'm happy to do that. I'm not your financial advisor, but I'm happy to tell you what I'm doing and to answer any questions that you may have.
Well, Rob, I sure appreciate that. You're providing some great resources for folks in what's not the easiest financial time yet. But when you understand it, there is a lot of opportunity out there. So again, goldsilverpros.com. Rob Kientz, thank you for joining me. We'll look forward to doing this again soon.
Look forward to it. Thank you so much, Chris.